Inflation and rising prices have become prominent concerns in today's global economy, with many people searching for answers to why the cost of goods and services continues to increase. A major cause of this inflation, as financial experts often point out, is tied to the government's practice of printing more money. When a government floods the economy with printed currency, the supply of money increases, which can reduce its value. This leads to higher prices across the board, as more currency is chasing the same amount of goods. The public is generally aware of this basic economic principle, but understanding how to combat it is a different matter altogether. Bitcoin, a decentralized form of digital currency, offers a unique solution to this problem. Unlike fiat currencies, Bitcoin has a fixed supply, capped at 21 million coins, which ensures that no central authority or government can create more. This scarcity is a stark contrast to the unlimited money printing done by governments, making Bitcoin an attractive alternative for those seeking to protect their wealth from inflation. The algorithm that governs Bitcoin's issuance is designed to prevent any manipulation by external forces, which gives it an appeal in an increasingly volatile global economy. But while Bitcoin offers this theoretical solution, many remain skeptical or uninformed about its practical uses and potential long-term value. Despite the theoretical advantages Bitcoin offers, the path to its mainstream adoption is fraught with challenges. People are often hesitant to embrace Bitcoin because of their unfamiliarity with how it works, compounded by common questions regarding its legitimacy and functionality. The most frequent concerns revolve around whether Bitcoin is real, in the sense that it's not tangible like traditional forms of currency. Additionally, the complexity of understanding how Bitcoin transactions work and how to store it safely presents barriers for many newcomers. Skepticism often stems from a fundamental distrust of digital currencies. For centuries, physical forms of money such as coins and paper bills have been the standard, and the idea of trusting a currency that exists only in a digital format can be unsettling for some. This distrust is further amplified among those who have built their careers in traditional financial systems, where the principles of fiat currency and centralized banking are deeply ingrained. For many in the financial world, accepting a decentralized currency like Bitcoin goes against their core beliefs about how money and value are supposed to function. This hesitation is less prevalent among individuals who are not as entrenched in the traditional financial system, such as blue-collar workers, who may find the concept of Bitcoin more intuitive and relatable. They can grasp the idea that governments printing money leads to inflation, and that a currency immune to manipulation might be a viable alternative. Additionally, Bitcoin faces the hurdle of FUD, fear, uncertainty, and doubt, a term commonly used in the cryptocurrency space to describe misinformation or skepticism aimed at creating doubt about Bitcoin's viability. Critics often argue that Bitcoin's volatility makes it an unreliable store of value, or they bring up concerns about its regulation and legality in various countries. However, those who have been in the Bitcoin space for a long time have heard these concerns before and have developed responses to address each type of skepticism. Bitcoin's appeal lies in its decentralized nature and its scarcity, which makes it immune to inflationary pressures that plague fiat currencies. While traditional currencies are issued by central banks, which have the authority to print more money at will, Bitcoin's supply is predetermined by its algorithm. This means that no central authority can inflate the supply of Bitcoin, offering a kind of financial stability that fiat currencies cannot. In times of economic instability, Bitcoin is increasingly viewed as a hedge against monetary chaos. Its decentralized and borderless nature allows people to store and transfer value without the need for intermediaries like banks, making it accessible to anyone with internet access. Moreover, the network effect of Bitcoin is rapidly growing, and with that growth comes increased security and value. Each new user strengthens the overall system, as more people participate in the network by running nodes, mining, or simply using Bitcoin for transactions. This decentralized network is what makes Bitcoin resilient to attacks and manipulation. The transparency of the Bitcoin blockchain, which records every transaction, further adds to its appeal as a reliable and trustless system for storing value. In this way, Bitcoin operates not just as a currency, but also as a form of digital gold, an asset that retains its value regardless of fluctuations in government policies or economic conditions. The growth of Bitcoin's adoption is evident in the number of wallet downloads, which track the usage and spread of Bitcoin across the globe. Recent reports suggest that millions of Bitcoin wallets are being downloaded daily, signaling strong global interest in this alternative currency. This widespread adoption reinforces the belief that Bitcoin is more than just a speculative asset. It is increasingly being recognized as a legitimate financial tool capable of providing stability in an unstable world. Comparison to traditional financial systems and gold. Bitcoin's rise is often contrasted with the traditional financial systems that are dependent on fiat currencies, which are susceptible to inflation, manipulation, and central bank policies. Fiat currencies are backed by governments and central authorities, which can choose to print more money in response to economic crises. While this can provide short-term relief, it often results in long-term consequences like inflation and a devaluation of currency. Bitcoin, on the other hand, is decentralized, meaning that it is not controlled by any government or institution. Its value is determined by supply and demand in the market, and its scarcity is hard-coded into its design. For centuries, gold has been considered the ultimate store of value, especially during times of economic uncertainty. However, some financial experts, such as Lepard, now argue that Bitcoin is a better protection against monetary collapse than gold. Gold is still valuable and will likely continue to serve as a reliable asset during times of financial crisis. But Bitcoin's advantages, such as ease of transfer, divisibility, and security, make it a faster and potentially more efficient store of value. Gold requires physical storage and transportation, which can be costly and cumbersome, whereas Bitcoin can be stored digitally and moved across borders within minutes, making it more versatile in a digital age. This shift from gold to Bitcoin is supported by individuals like Robert Kiyosaki, who predict that the traditional monetary system is on the verge of collapse due to excessive national debt and the devaluation of fiat currencies. As governments continue to print money and expand their debt, Kiyosaki and others believe that people will begin to lose trust in traditional financial assets and turn to alternatives like Bitcoin to protect their wealth. Financial experts are predicting that the current trajectory of US monetary policy could lead to a significant devaluation of the US dollar. As the US national debt continues to balloon and interest payments on that debt reach unprecedented levels, there is growing concern that the dollar will lose its status as the world's reserve currency. In this scenario, central banks would need to raise interest rates to attract buyers for US Treasury bonds, but higher interest rates would also mean higher costs for servicing the national debt. This could lead to a vicious cycle where the US is forced to print even more money to cover its debt obligations, further weakening the dollar. Bitcoin proponents, such as Lepard, believe that in this environment, Bitcoin will rise dramatically as people seek alternatives to the dollar. As more people lose trust in fiat currencies and seek assets that cannot be inflated, the demand for Bitcoin could skyrocket, pushing its price into the millions. Lepard predicts that if US Treasury bond yields rise to 6 to 10%, it will trigger a crisis of confidence in the dollar, causing a rush to sell dollar-denominated assets and buy assets like Bitcoin. This could potentially drive Bitcoin's price to $1 million or higher as people flee the dollar in search of a store of value that cannot be printed. However, this scenario is not without risks. Bitcoin's volatility remains a significant concern, and its price can fluctuate wildly in the short term. While its long-term prospects may be promising, investors must be prepared for periods of sharp declines, as the market is still relatively young and subject to regulatory challenges. One of the most appealing aspects of Bitcoin is the strong community that has formed around it. The Bitcoin community is known for its openness and inclusivity, with many enthusiasts eager to share knowledge and help newcomers understand the technology. Bitcoin conferences are described as friendly and approachable events, where experts and beginners alike can interact and exchange ideas. Unlike traditional financial sectors, where elitism can often be a barrier to entry, the Bitcoin community is characterized by its humility and respect for others, regardless of their level of experience. Michael Saylor, CEO of MicroStrategy and a prominent advocate for Bitcoin, has also become a key figure in the community. His involvement has further boosted confidence in Bitcoin's long-term viability, especially among institutional investors. Saylor has publicly stated that Bitcoin is a superior form of money due to its technological robustness and its ability to store value over time. His endorsements have encouraged many to take Bitcoin seriously as a financial asset, and his predictions of Bitcoin reaching prices in the millions have made headlines around the world. Despite its rapid growth, Bitcoin remains in a phase of increasing adoption, with more people and institutions recognizing its potential as a financial tool. The continuous increase in Bitcoin wallet downloads is evidence of this, with millions of new users entering the space every year. This growing adoption is one of the key drivers of Bitcoin's future success, as each new user strengthens the network and increases its overall value. Investing in Bitcoin is not for the faint of heart. Its price volatility can be daunting, especially for those new to the cryptocurrency space. However, many long-term investors believe that the potential rewards outweigh the risks. The key to successfully investing in Bitcoin, according to experienced investors like Michael Saylor, is to view it as a long-term asset. Rather than focusing on short-term price fluctuations, investors should adopt a buy and hold strategy, also known as hodling in the Bitcoin community. This strategy has proven effective for many early Bitcoin adopters who have held onto their investments through multiple market cycles, ultimately reaping substantial rewards. Saylor and other experts warn against panic selling during periods of market volatility, emphasizing the importance of staying calm and keeping a long-term perspective. Bitcoin's price may go through significant ups and downs, but those who have the patience to hold through the downturns are likely to benefit in the long run. This is especially true as more institutional investors and corporations begin to allocate portions of their portfolios to Bitcoin, further legitimizing it as a long-term store of value. Diversification is another key element of a successful investment strategy. While Bitcoin is an attractive option for many, it's important not to put all your eggs in one basket. Financial advisors often recommend a diversified portfolio that includes traditional assets like stocks and bonds, as well as alternative assets like gold and Bitcoin. This strategy can help mitigate risk while still providing the opportunity for substantial gains. The growing national debt and the increasing likelihood of currency devaluation have made it more important than ever to protect one's financial future. Traditional financial systems may no longer offer the stability they once did, and alternative assets like Bitcoin provide a promising way to safeguard wealth in an uncertain world. Bitcoin's decentralized nature, fixed supply, and growing adoption make it a compelling option for those looking to hedge against inflation and the potential collapse of fiat currencies. As the global financial landscape continues to evolve, it is crucial for individuals to stay informed and consider all their options for protecting their wealth. While Bitcoin is not without its risks, it offers a unique and potentially transformative solution to the challenges posed by inflation and government control over monetary systems. By diversifying their portfolios and including assets like Bitcoin, investors can better position themselves for a future that may be very different from the present. Lastly, viewers are encouraged to like, comment, and subscribe to stay